from the get-go, I have to apologize for my voice. I think I have a little bit of a cold, but it's great to be here joining this event. And I do have to appreciate, all the years that I've had an opportunity to work with Fausto. Fausto's a great guy, great educator, and a great trader. So it's good to be, part of this event with him. So thank you. Thank you for that. Let me go ahead and share my screen just to make sure that you guys can see it. Just a moment. That should come through very quickly. Okay, there we go. And when Fausto and I talked last time during the masterclass a few weeks ago, he said that it'd be interesting to talk a little bit about options and some of the tools around options trading that TradeStation has to offer. So I created this presentation titled Strategize Options Trading with OptionStation Pro, where we're going to take a look at some of the tools that you can use on TradeStation in terms of analysis, also in decision making and trading when it comes to placing trades right on the TradeStation platform. But before we get started, usual disclosures, just as any other broker, we need to disclose that examples and symbols that we use are for educational purposes only. These are not recommendations of TradeStation. Also, active trading is not suitable for everyone, especially when it comes to trading options, which carry a higher degree of risk. And also, past historical performance is no guarantee of future results. If anybody needs additional information on disclosures, you can go to www.tradestation.com/important-information, and you'll find a ton of information on disclosures there. Okay, I'm going to switch over to my TradeStation platform and start to talk a little bit about options analysis. I'm not sure, this is data that I don't have, but I'm not sure how many people here already use TradeStation. I know that, Fausto brings in a lot of TradeStation clients. So if you are already using TradeStation, these are tools that you can use and utilize right out of the box. And if you're not part of the TradeStation family, this is just a presentation to show you what, TradeStation is capable of doing and some of the things that we can help you with as well. I shared with Rich a file, which is a zip folder that has a couple of workspaces and a couple of custom studies that I'm going to showcase today. So if anybody is using TradeStation, he will just make sure to share those with everyone here so that you can have them and keep them. Just eventually, if you join the TradeStation family, you'll have them so that you can also use them on your platform. Okay, so here on this particular workspace, I have the S&P 500 here on the right-hand side. So this is a list of all the stocks that make up the S&P 500. And over here on the left, I have a chart that is linked to the radar screen. So I can very quickly click on any of the symbols that show up here in my, well, these are not linked. I lied. I thought they were linked, but they're not. They can be easily linked by just clicking on that S at the very top. When you see that S light up in a particular color, as long as they're the same color, they're communicating with each other. So I can click now on any of these symbols like Airbnb, and then you can see the chart update to that symbol. It makes it very, very, very simple to do. Now, the couple of indicators that I have here on the bottom left, these two right here, are indicators that use two forms of volatility. We have implied volatility, and then we have historical, which is also referred to as statistical volatility. Let's explain historical or statistical volatility, which is simpler. Historical, or also called statistical volatility, is based on the price activity of the security. For example, we're looking at Airbnb right now. So we see how the prices have gone up and down, and that magnitude of price movement up and down is what is measured as volatility. When the prices move more, of course, it is said that is increased volatility. And when the prices are kind of trading within a channel, of course, volatility drops. So that's, in simple terms, what statistical or historical volatility is. It's just a measure of where the prices have been historically, how far they've moved up or down, and it's measured in relationship to historical prices. So to have a sense of if volatility is high or volatility is low. In terms of implied volatility, which is totally different, Implied volatility uses options data in order to determine what the volatility of the security may be going forward. So we're talking about two different types of volatility here. One that is historical or backward looking. It looks at all the price movements in history and measures volatility. And then there's one that is implied and it's forward looking by looking at the options pricing. So there's a relationship between implied volatility and historical volatility that every options trader needs to take a look at. This indicator that I have here in the middle, we title it IV range percent. And what it measures is where implied volatility is at the moment compared to where it's been in the past. In this particular example, we're looking at 100, and you can see the 100 here in parentheses. We're looking at 100 historical trading days, identifying what the highest implied volatility was and what the lowest implied volatility was, and then telling you where the current volatility falls within that range. So if you look at the volatility or the implied volatility right now is at 12.38, that is 12% of that range. It's very, very low compared to where volatility has been in the past. So it's a very interesting indicator because it does give you a measure of how options are priced, meaning the following. If historical volatility is higher than implied volatility, then it is said that the options are overpriced. In this sense, for example, implied volatility is very low. Actually, that's the indicator right here at the bottom where you have the comparison between the implied and the historical. You can see that the red line is the implied and the cyan line is the historical. Those are the two volatilities that we talked about. And whenever you have the implied, in this case is the red one, below the historical, it is said that the stocks are going to be underpriced. And it's a very clear concept to understand once you're looking at an option chain. Let me show you an example. This is Airbnb, right? Let me go here to my OptionStation Pro and pull up another symbol. I was looking at an example because I'm going to jump over here to this other workspace to show you some examples on how we can look for bullish stocks where we can establish options positions. When I was doing a scan earlier this afternoon, this stock came to the top of the radar screen, super microcomputers. And I'll show you how do we do a scan and how did we get a notice on this particular stock. But SMCI is the symbol for super microcomputers. And this indicator, as you can see over here on the right-hand side, is underpriced. When I pulled up super microcomputers inside of OptionStation Pro, this is what I saw. All right, this is super microcomputers. You can see the stock up here. You can see that this is the option chain of the options that expire January of next year, 2025. So there's still about 37 days until the expiration of this option group. Now take a look at the bid and ask prices of these options. On the call side, we're talking about $5.25. On the put side, we're talking about $4.70. Now, these are the prices where implied volatility is calculated. Now, if you look at the theoretical value of these options, is over here on the left-hand side. Theoretical value of the call is $10.53. And on the put side, if you look at the theoretical value, is $10.03. So it does clearly imply that these options are underpriced based on the comparison between implied volatility and the statistical and historical volatility. So when it comes to deciding, which options to trade when you are bullish, you would want to focus on the ones that are underpriced because there's potential for those options to gain value. The same happens if you are selling options. You want the options that are overpriced because there's potential for those options to drop in price. We always want to be on the right side of the market. So having a sense of knowing or having a sense of which options are underpriced, overpriced, or neutral, I think it's something important that every options trader needs to know. The implied volatility calculation is also reflected here on the left-hand side. Everybody sees where it says the 103.76 right here on this row. This is implied volatility. What it does, it takes all the options prices, well, not all of them. It takes, I mean, there's a calculated formula that goes into, the option chain, looks for certain options, and then calculates a value that is the implied volatility. That's why it said that it's forward looking, because based on this number, this 103%, it is implied that the security or the underlying will move $10.34 plus or minus. Everybody sees the number in parentheses. So there's an expected move based on that implied volatility. And that is the reason why it said that it's forward looking, because there is a probability that this security, which is super microcomputer, is moving up $10 or down $10 from its current price, which is significant because the price is only priced, or the security is only priced at $38. So a $10, we're talking about something, close to the 20% movement. Now, how long is that movement going to take, supposedly, or theoretically? Of course, 37 days until the expiration of the options. There is a ton of information here in OptionStation Pro that can help you make informed decisions as to which securities to trade and which options to trade. Now, let me go back here to my TradeStation so that we can take a look at another example. So we looked at these two indicators. We looked at, implied volatility range and see where the volatility or the implied volatility is at this moment in comparison to the past. In fact, let me go ahead and load up the symbol that we were looking at. SMCI, is it? Yes, super microcomputer. If you take a look at SMCI, you can see that implied volatility is at 20%. So it's 20% of its 100 trading day range. So it's rather low. So in terms of options, you're going to see that these options are relatively cheap. This indicator right here is kind of split into 5 different sections. I'm not sure if you see the dotted lines in between, but any implied volatility that falls on the very bottom section, it's going to be represent cheap options. Once you go above that, that's moderately cheap. Right in the middle is neutral. Then you have moderately expensive, and then at the very top you have expensive. That's when you find options that are going to be overpriced, and for the most part, that's the prime prime state where traders are looking to sell options because they implied volatility is high and prices are expected to drop. And you can see here the relationship between implied and statistical, and you can see that in this particular statistical is much higher than the implied. So for super microcomputers, we're talking about options that are underpriced. Now, of course, that's very clearly displayed here on the radar screen. I don't have super microcomputers here, but if I go back here to the bull call spreads, you can see that super microcomputers is underpriced under this IV Compare study. Now, how did we come about this super microcomputers? Well, we use the scanner. The scanner is right here at the bottom. The scanner does allow you to scan through hundreds of different stocks and find the ones that are meeting certain criteria. In terms of a particular option strategy like the bull call spread, that's why the scan I named it bull call spread. We're looking for opportunities to establish a bull call spread. I'll explain what a bull call spread is in just a moment if you're not familiar. But what we did here in this scan, let me go ahead and customize it so that you can see some of the filters that we applied. Here are the categories. The first thing is description. So we want to see the name of the corporation. That just lets you know, what's the corporate behind it. Not only an acronym, but you can see, the corporation's name. Then we have the last traded price. We're looking for stocks that are over $15. That'll help us drop any of the penny stocks or stocks that are lightly traded. So that's why we have that filter on price. You can make that price anything you want, by the way. And in terms of volume, we're looking at a 3-month historical volume average, and we want that to be greater than 100. No, this is 1 million. So we're looking for trading activity. We're looking for the stocks that we want to trade. We want those stocks to have liquidity. So volume is something that's really important to filter by to make sure that we're able to get in and out swiftly. There's nothing more frustrating to a trader than wanting to get rid of shares and nobody wants to buy them, or wanting to buy shares, then there's nobody to sell them. So if you focus on securities that have high liquidity, high trading activity, then this is less of a concern. You know, it doesn't mean that you have a guaranteed execution, but it's less of a concern. Then we're looking at percent change. Look at this filter. We're looking at percent change for the past 4 weeks to be greater than 20. With this filter, we're looking for momentum. We're looking for stocks that have appreciated in value and are showing us a bullish characteristic. In addition to that, we have two different RSIs. Let me open one of them because the first RSI is a daily RSI. Notice how the interval is daily, meaning that it's using daily candlesticks and is looking at the RSI value to be somewhere between 40 and 70. Why 40 and 70? Because we don't want the security to be oversold, because that's just an indication that the security is probably going down. We don't want the security to be overbought either, because it may have lost all of its momentum already. Of course, you know, a stock can remain in an overbought state for a prolonged period of time. But in this particular scan, we're going to avoid anything that is overbought, assuming that they've reached their top and they're about to drop. So we want stocks that are somewhere in between 40 and 70, which is kind of a sweet spot for RSI, meaning that there is potential for the security to go up. Of course, at that sweet spot, there's potential for the security to go down. And that's why we couple this with, you know, the percent change momentum, because these are stocks that are appreciating in value already. And in terms of the RSI, they're not overbought yet. So there's room for improvement to the upside. And then there's a second RSI that is on a weekly interval, meaning that it's calculated on weekly candlesticks, and we want that to be greater than 40. So not only are we looking at a medium term, because we're looking at 14 trading days, a medium term RSI, but we're also looking at a weekly RSI, and we want that to be greater than 40, or at least have some bullish momentum. It is said that any stock that is bullish usually keeps itself above 40 on the RSI study. I do have a third one here, but sometimes if you add a third one, the scanner becomes a little bit too restrictive and it doesn't throw any results. This one right here is looking for a 60-minute RSI, and it's looking for it to be less than 30. So now it's a little bit contradictory, but we're looking for is a pullback. So yes, overall, the stock is bullish, but all of a sudden, you know, in an intraday chart, we see a dip in prices. The stock is oversold because it's less than 30, but there's potential that the stock may continue in its overall direction, which is bullish. So it's a small pullback. And sometimes, you know, capturing those small pullbacks may improve your trade efficiency. Now, I'm going to run it without it, and then I'm going to run it with it to see what type of results we get. But when I found super microcomputers, this is exactly what I did. I just ran the scan. It calculated, you know, all those filters for me, the RSI calculations as well. All right, let's wait until that finishes. Is at 99%. There we go. And what I did is I clicked on all the symbols. There's a total of 60. I copied them. Went here to my radar screen. Let me remove the ones that are here. I'm just gonna delete the ones that are here. Okay. Where you see that I'm blank on my radar screen, and I just pasted Control V. So it pasted all the symbols in here. The first thing that I did is I wanted to see which one had the most open interest. So I double clicked. It sorts in ascending order. I double click one more time, and it sorts in descending order. And guess who's at the top? Super microcomputers. That's that's how I found this symbol. And it's just an example. It doesn't mean anything. I haven't looked at super microcomputers just to make a more informed decision. But I do know that it came up in my scanner as a bullish stock that was showing a little bit of bullish momentum. If I were to turn on that other filter, let's go ahead and click on customize, turn on this third RSI, which is the pullback piece of the filter. I'm going to run this. Okay. Since we added an additional filter, it may take a little bit longer to calculate, although it's only calculating on 62 symbols. You choose 62 symbols right here, but it may find that there's no results. You know, maybe a lot of these symbols, although I'm looking at, yeah, you see a lot of these RSI, most of them are overbought. I'm not sure if it's going to find anything that's oversold. Although this is an overbought on a daily interval. So it says no symbols met the selected criteria. And that's one of the reasons why I turn it off for some of the scans that I do. But sometimes, I run it with it because it may present an interesting opportunity where you have these overall bullish stocks that are kind of dipping a little bit and then probably continuing in the same direction. So it may provide a more efficient entry point. But without the filter, we get the list, and this is the symbol that came up, which is super microcomputers. Now, in terms of what to trade, so one thing is to understand, what's your position on a particular security? Are you bullish? Are you bearish? So now, what is it that you can trade, and what are the possible outcomes? I can definitely, buy 100 shares of SMCI. How much is it going to cost me? Well, the last traded price is $38.26. So if I put in a trade for 100 shares, it's going to cost me around $3,800. Pure math, right? We multiply the last traded price times 100, move the decimal place, and it's about $3,800. Or we can buy a call, right? We know that if you buy a call, there is bullish potential, and you don't have to dish out the $3,800. So if I go here to my OptionStation Pro, and I'm looking at the calls here that are priced under the January expiration, maybe I want to hold this option for a few weeks or maybe 30 days before it expires. I know that I can buy a call. If I buy a call, it's going to cost me $5.30. I'm going to click on the asking price to show you something interesting. Well, first of all, as soon as you select a call, which in this case I did, it highlights the whole row for me. There's a line or a red line that shows up on the strikes. This red line is showing me where profitability begins. As you can see right now, it's red. So any price around 38 would still generate a loss for me. Why? Because this is costing me $5.35 per share, or $535. So if you look over here on the trade bar, you can see that the maximum loss, which is over here on the right-hand side, is $530, which is the price that I'm paying. Well, the price is right here on the limit price, but because it keeps on changing. But if I shift this to 535, here's my maximum loss is $535. That is a transactional cost that I need to recover. So in order for me to be on the green, this price or this security needs to increase at least by $5.35. Where should it go? Well, let me go ahead and increase the strikes here for a moment. I'm going to show 20. Take a look. We can see where the line turns green. It's right after 43. Why? Because you do have to add the $5 to the $38 that the stock is trading at the moment. It needs to go past 43 in order for you to start making money. This is also visible here when you go to analyze the trade. I'm going to click on analyze here, and this draws a graph for me. Now, the graph is very telling. Let me go ahead and squeeze the prices here. The prices of the underlying are right here at the bottom. Graphing an options position does tell you a lot about where profitability is and how much the price needs to move in order for you to be profitable. We have the prices of super microcomputers right here at the bottom. 38 is the last traded price, 38.40. That's where the yellow line is. By the way, the other two yellow lines are hypothetical scenarios of what would happen if super microcomputers would be down 5% or up 5%. So this is very good for you to create these hypothetical scenarios, or more like a sandbox. What would happen if? Because the if is very important, and we need to be aware of the risks if the price were to move up or it were to move down. Now, the three lines that you see here in the graph is the value of this options position at different times The blue line is at expiration. Do we know what the expiration date is? Right here, January 17th. You see the expiration over here on the top right corner. The green line is somewhere in between. You can see that right now, the green line is set to December 23rd, and the white line is today. It says now. Days to expiration is 37. So in reality, if you look at the value right now, yeah, the price of super microcomputers does not need to go all the way up to 43 in order to be in the green. Where does it need to go? Well, is exactly where that white line crosses over the negative or the zero line. The zero line is right here. As soon as it crosses the zero line, you're in positive territory. So yes, at expiration, the price of the underlying needs to be above $43, but there is time value in the position that accounts for some of that. So notice that today, the stock only needs to move up a little bit higher for you to be on the profitable side. In fact, if you look at this price slice that says if the price goes up 5% to $40.27, there is a theoretical profit of $112. So that's if it happens today, which is interesting, right? Of course, your plan is to hold this position for a little bit longer. And let's say, for example, that we want to hold it until the end of December. Now, December here is December 23rd. We can adjust that if we want to. I can go here to the settings of OptionStation Pro, to the graph, and I can say the green line, as I slide this little slider left and right, you're going to see how the green line changes in the background. Let me move this over so you can see it. You see the line moving? You also see the date changing here. I'm not sure when the last trading day of December is, but I'm going to check right now. Is December 31st. It's a Tuesday. I think the markets are open the 31st. I expect the markets to be open the 31st. So let's say, for example, that we want to hold this option until the 31st. I'm going to just slide it until I see December 31st up here and then close it. Now, if you look at my price slices, they're all set to the now line, but I can click on this drop down for plot and say, set those to plot number 3, which is my green line. Notice how the text here turns green, an indication that I'm looking at the valuation of the green line. But notice that if super micro computer goes up 5% and I'm holding on to that until December 31st, I'm still losing money. So it's very telling that the time component or the time value of that option diminishes. There's a time decay that occurs on these options that we have to be aware of. If we hold it until December 31st, maybe it's too late. There's only 17 days until expiration, which is very little time value. The stock or the underlying security would have to move more in order for me to make any profits. Now, of course, I can change this. I can change, these prices. I'm not saying that it's going to go up to $40, but let's say, for example, that I drag this to, say 45. Maybe I think it'll go up to 45. Excuse me. So if I drag it up to 45, I can see the behavior. I can see that if SMCI goes up to 45, would make a theoretical profit of $294. Now, on an original investment of $535, how much return is that? I have my calculation right here, so we're just a small calculation. $294 divided by 535, which is the additional investment, gives about a 54% return on initial capital. Pretty massive, right? Pretty incredible. Now, of course, this is if all the ducks align, and if what I'm looking for actually materializes, which is the stock goes up to 45, I'm holding the call until December 31st, and I realize this profit. Okay, but then again, I didn't have to dish out the $3,800. In fact, the $3,800, let's say, for example, the stock goes up to 4,500 minus the 3,800 investment. That's about a $700 profit divided by the original investment, which is 3,800, gives us about an 18% return on initial capital. So even though we're bullish on both trades, buying the shares of Supermicro Computer, it makes sense that the options trade would be, and this would provide or would generate a higher return on initial capital if our assumptions would come true. And if everything turns out exactly on both scenarios, okay? Some things to think about, and in terms of a bull call spread, which is the original topic of this presentation, let me show you how that works. Let me go back here to the option chain, because a bull call spread, it's an option strategy that is also bullish, but it does reduce the cost and reduces the risk. As soon as you're reducing the cost of your trade, you're automatically reducing your risk. And it's something to think about. For example, if I were to buy the 38 call, but at the same time, I were to sell the 43, let's see, or maybe even more, maybe the 45, because we think the price is going to go up to 45, but not any further, because selling options is something risky, and we all need to be aware that if we are selling an option and the price is not in our favor, is on the other side's favor, we can get assigned. An assignment is a big risk that we all need to be aware of. But in this case, I can sell the 45 call in addition to buying, the 38 call, as I said originally. But take a look at the price here. The price is different because I am paying for the 38, but I'm receiving money for the 45 because I'm selling it. So my cost here, my maximum loss, went down from 535, which is by just buying the call, to 242, which is buying the bull call spread. Of course, it also limits my profits. Let me go ahead and analyze this bull call spread and see what type of return I would get. Let me go ahead and analyze this. Okay, so now here at the bottom of my OptionStation Pro, I have both the vertical and the single. Let me go ahead and uncheck the single so that I just see the vertical. And on the same scenario, if the price were to go to 45, by December 31st, I would make a profit of 175. Now, if I take that 175 and I divide it by the original investment, which is 242, it gives us about a 72% return on initial capital. So again, that's just, if all this hypothetical scenario would actually turn true, which, it has to be taken with a grain of salt and some, realistic stand. How likely is for super microcomputers to go up to 45? We know that based on the pricing, when we went here in the option chain, there's an expected move of $10. There's an expected move of $10. Of course, that expected move doesn't give you direction. That's why it has a plus or a minus. So the same probability that you have of super microcomputers moving up $10 is also the probability that it has moving down $10 based on the implied volatility. If it goes down $10 from 38, that means that the price would drop to 28. Let's go ahead and take a look at what that would generate. I'm going to turn this and drop it here at 28. At $28, you can see that your theoretical P&L here will be $217 at that date, December 31st. It's not the maximum loss here. The maximum loss is 242. That's the maximum you would lose at any given point. But it's interesting that I can use all these tools to measure and see what is the likelihood of an options position to turn a particular profitability. So there's three scenarios that we talked about here. We talked about, placing placing a trade on the underlying asset, on the shares, like buying the 100 shares outright and, dishing out the $3,800. We talked about just buying the call, which is also bullish, and only paying $535 for that call. It also has, profitability if the price goes up. But then we talked about the bull call spread. which is a multi-leg option strategy. It's called a spread, and you're able to reduce your cost, increase the return on initial capital if it goes in your favor, and reduce the risks at the same time, because the maximum risk here would be 242. Although, again, be aware of the assignment risk, because where we don't live in a perfect world, things do happen. And if you get assigned, you do have to be prepared to what that represents. Okay. And we also looked at a couple of indicators. Let me go back here to my TradeStation. We looked at implied volatility and how does it stand in comparison to the last 100 trading days, and how does implied volatility compare to statistical volatility, which allows you to determine if options are underpriced or overpriced. Let's see. Are there any questions? I'm not sure if the audience can send questions, but wanted to maybe open up the floor for a few questions if there's time. And also the link that is shared right there in the chat, of course, gives you access to that zip folder. It contains, those two workspaces that I have here on my TradeStation, and it has those custom indicators that you would need. And this is what you need to do if you're a TradeStation user. This is what you need to do. You need to download the zip folder. Once you have it on your computer, go in there, and before you open up the workspaces, double click on the ELD. The ELD is going to contain the custom easy language, these two indicators that I'm showing here on the chart. If you open up the workspace before the indicator, it'll generate an error and it'll say, hey, it has been deleted, or something that is confusing. So make sure that you double click on the studies. I think I call them masterclass IV studies or something like that. You double click on that file. Let me show you what it looks like when you double click on it. When you double click on that file, this is what pops up. This is the import wizard. Notice that it has indicator checked. When I click next, it has the three indicators, IV compare and IV range percent. Why are there two IV range percent? Because one is for charting and the other is for radar screen. It gives you the same information. The benefit of having in radar screen is that you can rank. But then if you finish through this wizard, it'll give you all those indicators that we see here. Let me show you how cool the radar screen indicator is, because I don't think we looked at it. This is yeah, right here, the IV compare. There's a couple columns right here that I want to hide. For example, this implied volatility, it says implied all the way down. I don't need it. The same for statistical. It says statistical all the way down. It's just letting you know which color is which. So red is implied and blue is statistical, but I can just look at the column headers up here as well. So if I right click on that header, go to studies, and I'm going to click on show hide plots, and I'm going to hide statistical volatility and implied, at least the labels. I'm going to click OK, and you can see how everything just condenses a little bit more. The nice thing about having an indicator like this is that I can rank symbols that are part of a sector or an index. Right now, I have the S&P 500 index, and I can sort by the ratio between the implied volatility and the statistical volatility. If I double click, let me double click, it'll sort in ascending order. So it goes from the lowest to the highest. Notice that you see the ones that have the most difference between statistical and actually, I think I removed the column that I didn't want. Let me go back in here. What I wanted to move was statistical, and I wanted to leave this one. Okay, there we go. That way we can see statistical and implied volatility. You can see that implied is 30%. Statistical is 91%, almost 3 times as high. So this 66%. So implied volatility right now, it's about 66% of the statistical volatility. What does that mean? That the options are going to be underpriced. If I double click on this column header one more time, it'll sort in descending order. And you can see, for example, K. K is Nova, and you can see that it's 769%. Why? Because its implied volatility is 35%, when statistical is 4%. So what are you going to see? Overpriced options. Let's go ahead and take a look at that symbol in OptionStation Pro. Let me go here to OptionStation Pro for a moment. My options, let me load K. You can see the prices of the options right here. Sometimes if there's not a lot of trading volume, you may get some values that are skewed. For example, here we have NE, which doesn't have enough historical data to calculate correctly, but the prices here are lower than the theoretical value. So it means that they are cheaper. So if I go back to TradeStation, that's one of the examples that, the data doesn't really help us determining if the prices are underpriced or overpriced. I was going to say the same thing, this 769% just seems odd, like an anomaly. And it just means that there's not enough data for it to do a fair comparison. But let's go here and take a look at Nike, for example. Nike says it's overpriced. We see that the ratio is at 92%. Statistical is much lower. So I should see options that are more expensive. Let's go ahead and take a look. Let's pull up Nike here. All right. So yeah, you can see, for example, options here, the calls are $4.70 when you see the theoretical value at 3. So we're seeing that the options are much more expensive than what they should be. So these are overpriced options in terms of Nike. So when an options trader comes and looks at this and says, well, if I'm bullish Nike, it's tough, because then you're saying I'm buying something that is already overpriced, something to think about, right? All right, that's it. So I didn't want to take more time than what I had. I think I had 45 minutes to myself. I'm not sure if there's anything else that I should be showing Fausto, but these are the type of things that I wanted to show you here, and the technology that we have at TradeStation.
Yeah, Jesus, regarding about the platform, about the options. So when did you launch the options platform? Is this the newer version, or when's this been out?
This is the same version that we've had for years.
Okay.
Yeah, Fausto did mention that we are working on a brand new TradeStation. It's an overall TradeStation platform that is going to eventually replace the desktop and other of our platforms. But that's not ready for consumption yet. So
I did see it. I was very impressed. That thing looks really slick and really, really nice. I'm looking forward to you do the alpha version of it. But if you're a student at Cybertrade University, you'll be able to showcase it. It's, like I said, it's pretty much the same thing. Not the same, but just a cleaner version of it. I did have somebody that did email us that was asking us some questions regarding about that layout. We did follow up with them. We did send it to them. And if you are looking, was it Anthony? This was the link. I'm currently looking for. Jesus says that there was a link for the TradeStation setup to load into my platform. I'm not sure if it's on the YouTube page showing Jesus. He said, can you please send me the email link? Yeah, we did send it to Anthony. And if anybody has any questions regarding about getting that, just send me an email at fausto@ctucorp.com and we'll get you that link. I think it was a link that you sent over, Jesus, to Rich.
Yeah, I sent him the zip folder. Correct. Yes.
Yeah, that's what it is. Gillis just said the same thing. How do I get the ELD folder for option scanner and indicators?
Yeah, and Gerard, just to clarify, the SMCI example is just a symbol that showed up on my scanner, and I picked it just at random. I really didn't do much analysis. So if you're asking me if I'm personally bullish on SMCI up to $45, no. I would have to do a little bit more analysis there just to see if it's actually going to play that way. But it's just a hypothetical example that we showed here. Yes.
When we were at the summit in Florida, we were talking a lot, Jesus, about about the Bitcoin stocks and stuff like that. And I know that now that I don't know if people know this, but now you can trade a lot of the crypto stocks, well, not just crypto, just more of the ETFs that are out there. What are you seeing out there on IBIT? Because Bitcoin's been doing really, really well today on the options calls. I mean, you could just show us a quick little example of what you see on the options on that.
You know, I haven't looked at, I'm not even sure if TradeStation supports, the options on Bitcoin. I know that it's a new product and it's been
Okay.
recently approved. Let's look it up, because I know that the symbol would be BTC USD, right?
No, IBIT.
IBIT.
Yeah, that's the ETF version of it.
Okay. So yeah, there we go. We have the options on the trust on the ETF. I really couldn't comment. I really don't follow these options, so I don't really have much to say about them. I know that a lot of people are following Bitcoin, and it did reach that $100,000, value. There was
101 now.
it hit a big dip though. I saw a comment here about you doing a video on having a dip on Bitcoin. It went down to 95 all of a sudden, right?
Yeah, I did a big video yesterday on it because it had a major support at 95. Really, 91 was the big one, but it just shows you how volatile it can get. But you know what? You don't have to trade Bitcoin, you could trade the ETFs. There's so many of them out there, but it is here to stay. What was not awesome was that it just, people don't know this, but now they just launched the options on it. So, which was great. And, and you can start trading against it because there are a lot of people that want to trade those stocks. And we rarely have hardly been talking about them that much, Jesus. Just recently after this, the whole Trump rally that came in that made the market really take off. So I think everyone needs to understand you got to pay attention what's hot for the industry. If it's COVID, if it's financials, if it's like, AI that we've been talking about. You got to just, as traders, as been there and seen it and been through everything I've been through all these years, you have to kind of pay attention to what's moving in the market. Because you could turn your eye. Next thing you know, you'll be holding the bag and you get crushed.
Yeah, correct. How does that IBT move in relationship to the BTC USD? Is it very correlated?
Very, very, very similar. Very similar. You could see the order. You can't. What's nice about it, that I'm really big on the TradeStation platform using the matrix, and it does got really nice iceberg orders out there, big block orders at certain price ranges. But yeah, I mean, listen, it's a lot of people betting on it going down, but I haven't seen it. It's like every time it backs off, it just keeps making a big pop. Like today, it's moving up really, really nicely.
I can see that. Yes.
Yeah. Yeah, it's moving, and it's moving side by side with Tesla too. I mean, we're up 5% IBIT. That's a lot. It's what's the high on that? 59.
Yes.
Yeah, 59. So we're almost there. We're almost there. But Jesus, thank you so much for being here. It's always been a pleasure. It was so great seeing you again. And you guys run such a well organized operation at TradeStation, and the events that you do are just absolutely great. And I highly recommend. We'll let everybody know when they're doing another event. But I really, I've never been to a better, more, fun, great food, great entertainment, great staff, great locations, great everything. I mean, having at the Miami University was just absolutely just a great experience in its own. And just look forward to the upcoming masterclass that you guys do. And we'll let you guys know when they're hosting them again. So it's always like to meet. You always have to meet. It's always nice to be there face to face. I mean, these webinars are great, but you know what? When you're there and you're there face to face and you get to talk on the side, it just really makes things so much more, educational, and makes it more, it makes a better experience of why you want to do business with TradeStation. But if anyone wants to know how to get a TradeStation platform, we showcase it in our cyber group trading room, and we've been showcasing it since the day we started this trading room. Just email me and we'll get you a nice little demo of that also. All right.
Great deal. Well, thank you for having me, Fausto. It's always great to share with them.
No problem, Jesus. And don't go anywhere. We're going to pick up where we left off right here. I'm going to be teaching a little bit more about the TradeStation platform. I'm going to show you a couple of techniques. We'll talk about some stocks that are moving today, what's going on into this close, how to use it. We'll talk about the level 3 and level 4 and all that good stuff. But thanks for coming, Jesus, and we'll see you soon.
Bye, everyone.
I'm a